How was that?
Dude, I have to go buy crypto.
Why?
Because, dude, I get it. It's everywhere. I'm this is happening.
Shireen, I've been talking to you since 6 months. I launched a podcast 6 months ago, and you still haven't bought crypto. Hello, guys. Anas Bhurtun here. I am the CEO and co-founder of ArtsDAO, which is an accelerator that will be bridging creators and artists in the traditional world into the NFT space, the non-fungible token space, and the metaverse more generally. I'm also the co-founder and co-host of the Crypto Shakes podcast, which is a podcast which simplifies crypto for everyday people.
Anas, what's your money up to these days?
Well, you're probably not surprised. It's fully invested in some extremely risky sort of area as well. Some might say risky, but in my view, it's probably the safest place to put your money right now, crypto. Okay. I'm very much bullish on this particular part of the market right now. And so for the past year, I've actually pushed almost 80% of my money into crypto.
Where's the rest?
The rest I obviously put into, I think for anyone who wants to maintain a good balance of income should have some of their money in savings, right? Some of their money in other kind of assets like real estate, if you can afford that. But actually for the average sort of 30-something, 20-something, buying real estate isn't really that realistic. It's not very easy to get that kind of exposure. You could buy stocks and bonds and things like that. But if when you're young, this is something I sort of picked up from a lot of the sort of money mentors I've looked up to, like Robert Kiyosaki. It's really the best time when you're young to put your money somewhere that's a little bit more high risk, a little bit more
You just
bullish.
call crypto safe.
In my view, the word risk has a lot of difficult ideas around it. Risk can often be managed. And if you can manage a risk because you understand it, it then becomes a lot more of a safer investment. And there are many ways of investing in crypto, which in my view are perfectly safe. And so that's why I feel safe having the majority of my portfolio in crypto. We
and the rest is cash lying around as like a backup safety net in case.
So the rest is actually in crypto stable coins. I consider that to be quite safe.
What is a crypto stable coin?
So a stable coin is any crypto asset that is backed by, let's say, a fiat or some other commodity. So for example, USDC or USTD, both are US denominated crypto assets, but they're backed one-to-one to the US dollar. So if I hold one USDC, I effectively hold one US dollar. In my view, because both of these institutions, well, let's say USDC in particular, they're regulated in the United States, I feel quite safe having my money there and holding my savings in USDC. To me, it's akin to holding US dollars in a bank account. And I have the majority of my sort of kind of mentally safe money in there because I can earn a lot of yield on USDC. And there are a number of platforms that pay you close to 5 to 12% just holding USDC by effectively loaning it out to other people, akin to what people are doing with banks here in Dubai. The difference, however, is that banks pay you a ridiculously small interest rate because of, well, the nature of interest rates today. In many countries, in fact, in Europe, they pay you negative interest rates, which means you are paying money to the bank to hold money with them. So for me, this is why I believe as a young person, you should be pushing a lot more of your money, if you can, into assets that can bring you more yield. And effectively in this period of time as well to fight inflation.
So you just mentioned a bunch of things, by the way.
It's a lot of things.
I don't understand.
It's a lot of things.
I was about to interrupt you and say, hey, but what does, yield mean? What does, but I did ask you what a stable coin means. So I was going to ask you what does fiat mean. I was like, it's all right. Let's let Anas go.
There's a lot of concepts here that maybe we should break down first so that the audience is able to understand how to build on top of that.
Can I ask you, how did you get to learn about these things?
I guess I have had a little bit of an advantage in the sense that I came from a family of sort of entrepreneurs. Like my father is an entrepreneur, and a lot of his brothers are also entrepreneurs. So I kind of grew up hearing words like yield, words like return, words like assets and liabilities growing up.
Okay.
It was something my dad always talked about with me,
Household talk.
Absolutely.
dinner chit-chatter?
I will say at my house, money chat was not taboo at all. So my dad was very happy to tell me, look, Anas, you got to be moving your assets here, or assets need to be put in this way to get the best yield, the best return, right?
Was your dad rich dad from Robert's book?
I think I would say he has characteristics from both. He has a poor dad mentality sometimes and a rich dad mentality sometimes. It's not always...
Poor dad mentality being like the hardworking...
Yeah, and also a kind of attitude towards money that sometimes isn't the best in terms of getting the best yield. So he's not exactly supportive of me being in crypto, for example. He thinks it's
risky.
He thinks it's a bit too risky. He thinks sometimes it's scammy in his view. But that's maybe a generational issue. But the other thing the other way I think I learned a lot about this was just from self-learning. And I think this is something that anybody can do.
Where did you go to self-teach yourself?
Firstly, let's not beat around the bush. YouTube is probably one of the best universities out there nowadays. There are some incredibly wonderful teachers on YouTube allowing you to learn anything you want, whenever you want.
100% agree.
There's also things like Udemy. I don't know if you've used Udemy, but I've used it a lot.
It's an edtech platform, right?
Exactly.
Where you take courses.
And you can learn anything you want.
Are there crypto courses out there?
Absolutely.
Okay.
And let me just tell you, the cost of those courses are close to $12 or below. They cost you nothing. The only thing that it costs you is your time. So I think there's never been a better time in the history of mankind to be working on your education and building your knowledge.
So prior to crypto, where was your money?
I think before I was in crypto, I was sort of a conventional investor, like what most people would be putting their money in, sort of index funds. I had my money very much in a Vanguard sort of fund, which was, you would expect a general return of 6% per year. And, I began to look at this and change my views on how money works, because I began to realize that, why am I being so safe with my money, right? Why am I so concerned?
Why were you being so safe with your money?
The truth is, when I was putting my money in those funds, I wasn't well educated about money in the same level.
Even though you grew up with money,
I grew up with this,
yeah.
But I think I hadn't put in the right amount of time to fully understand it. So I trained as a lawyer as well prior to doing what I'm doing right now. And in the legal field, there's a lot of focus on risk management and risk aversion, things like that. Conventionally, a lot of the conventional wisdom is just take your money and put it in index funds, because that's the best way for you to just put your money away and just forget about it.
And look, a lot of people can then retire based on these types of investments.
That's true, but actually, I would disagree with that now on a number of fronts. The first reason is, I'd say for a young person to be putting their money in index funds.
Define young, sorry?
Someone who's in their 20s and in their 30s, you're just starting out. If you're putting your money in index funds alone, you're really not taking enough risk for your age, It's fine when you're 50 and 60 to not take that kind of risk, because you need an income, or you need a source of income that isn't going to be so unstable, volatile. Yeah. But when you're in your 20s and your 30s, this is the time to really experiment and push yourself, because when else are you going to have that? You can fail 100 times when you're 20 and kind of come back.
But do you think that, so aside from the age being a factor, there could be other things and other factors that would push someone to be more safe in their, constructing their investment portfolio, such as having dependents?
Absolutely.
Like if I had a child and I had to pay for the child's education, I don't think I would, make such risky decisions.
So the way I would look at that is, so Robert Kiyosaki always, I like the way he thinks. He always says, can I purchase a good? The poor dad mentality says, I have to save in order to afford that, right? But the rich dad mentality is, what actions can I take to ensure this can be afforded by me? If you go through the index fund route, you are constantly, in my view, in a poor dad mentality, because you're waiting for something to happen. You're just putting your money in there, and you're like, okay, I'm going to get my 6%. But that's not really going to make a difference. You cannot think strategically. So let's say you have to make $10,000 tomorrow or next month. You need an action plan with your money that can afford that $10,000. That's how I think every single day. Like me and my business partner, we're running a business now, Art Style. We're building bridges between traditional artists and the NFT space. And we're thinking, how can we afford X, Y, and Z? We need to take the capital that we have right now and invest it in such a way where we can get a return that makes that worthwhile. Now,
so go on, sorry.
So I will say, of course, you can't just put all your money into this and make that happen. But if you, I don't know if you've heard about this. It's called
the bicep curl.
It's like a bicep curl where you have on one side. You're right. So there are two parts to the weight. Okay, when you're lifting that weight, you have on one side a low risk strategy, and on the other side a very high risk strategy. And together, when you have these two parts together, you have a very good managed risk portfolio. So let's say you have 50% of your portfolio in super safe, bonds and, index funds. But then you take the remaining 50% of your portfolio and you put it into high risk stuff. Overall, then that leads to a portfolio that's, you could argue, in some ways balanced. You're not taking all your money and putting in something risky. You're taking some of it and putting it into something that could yield a lot more for you. And you're taking that and you're also researching with this percentage things that meet your goals. So let's say, going back to the example, I need to make $10,000 over the course of the next 5 months or so, right? I'll take some of my money and put it in index funds. Okay, this money, I know I'm not going to make $10,000 out of this because it's just not possible. But I need to find a strategy that'll get me that $10,000, right? So you need to take that $10,000 and look at where in the market, and within crypto, this is particularly very possible, very easy to make $10,000 because every single day there is opportunity. And I say that in different sort of levels. You've got the DeFi platforms, you've got NFTs, and you've got conventional crypto. There's so many different things that you can position your money in to potentially get you 1,000x, 2,000x, etc. And to me, it's a mistake for young people not to be exploring this right now.
So I'd like to think of myself as a young person, okay? I don't have any crypto holdings yet.
Yeah.
So if I was to take a step back and look at my portfolio, how would I identify what percent of it would be a good starting point to start allocating into more riskier assets like crypto?
Okay.
I'm not going to go at 50%.
No, of course not. Of course not. But okay, let's start with a conventional portfolio of $10,000. Okay, this is a reason. I know that's quite a lot for many people, but that's, I think, a fair amount of money to start with. $10,000. Now, if you are really new into the crypto space, I would take 50% of that and put it into stablecoins. I think stablecoins are super safe. Okay, this is basically one-to-one backed by you.
How can I do that? What is the process?
Okay. So firstly, you'd have to onboard with an exchange.
And just to kind of maybe recap my understanding, is the difference between a normal coin and a stable coin is that a stable coin is backed by a currency?
Correct. It's a very important distinction.
Okay.
So stable coins, like I said, they are fiat backed or they're backed by a commodity. You can have, for example, a gold stable coin. So a stable coin that is backed by gold. Okay. All right.
So something in the real world.
Something in the real world, potentially, yeah. So fiat backed stable coins are the most popular. This means that when you buy that stable coin, you're not at risk of volatility at all, right? Because, like I said, it's backed one-to-one, and the peg in the past, 4 years or so, 5 years, the whole time that crypto has been around, the peg has never really broken.
So then, like how the dirham is backed against the US dollar, is that exactly what a stable coin is?
Precisely.
So it's like I'd be picking another GCC currency, let's say, to put my money in.
Precisely. So this is where I say putting your money into stable coins makes a lot more sense. Why? Because if you put 50% of your income in stable coins, that's like holding US dollars, right? So you're holding US dollars, it's safe. Now, but you might say, well, US dollars are facing inflation. US dollars also, in the conventional world, you put that in your bank account, you only make 0.001%. So it's pointless. But in the crypto world, it's different. Have you ever gone and tried to take out a loan out of the bank?
Oh my God, it takes ages.
It takes ages. I'm in the midst right now of taking out a mortgage for a property.
Congratulations. Okay, we'll talk about your property investments in a bit.
It's almost, in my view, like I would rather have just taken out the loan from crypto and funded the property that way because it would have taken me a couple of weeks. A day.
Would you then in that process convert the loan into fiat and then pay?
Yes, absolutely.
So curious, because you mentioned you are investing in property. Why are you investing in property?
To be honest, it's not entirely driven by me. It's kind of driven by my family. My family believes that, it's important to have some property here in Dubai. So myself and my dad are together pooling some funds to purchase a property here, just so I can, because I'm looking to stay here more long term. We've decided to purchase a property in La Mer. And so we did this through an off-plan. I don't know if you heard of Port de la Mer. It's run by Dubai Holdings.
Yeah,
Port de
nice.
la Mer. So yeah, we've
invite us to the house party.
We've decided we bought a 3-bedroom apartment there just because we believe, one, it's in Jumeirah, so it'll hold long-term value. Two, the Dubai real estate has just been booming because of one, Expo. Two, the amount of people who have, I think, moved from Europe as a result of COVID.
Booming across what time period do you think?
Over the course of the past year, I think.
You think? I moved out and paying super cheap rent somewhere.
Perhaps in some other areas, the rent has gone down, but I would say in areas like Jumeirah, downtown, DIFC, and sort of the top-end villa areas, from what I've heard or seen, we've seen a 22% increase in overall real estate prices. So, like for example, this property that we bought off plan, we've already received offers that are willing to pay 15% more than we paid for it, and the property isn't even complete yet.
Oh, that's crazy!
But that's the benefit of buying off plan. When you buy off plan, it's kind of like an IPO. You get an investment prior to IPO, and then at the time of IPO, you get to sell, right? But before the IPO, the building isn't built. No one really knows about it. You can't really buy shares on the public markets, and so off-plan investing is kind of like VC investing in a similar sense. You're buying before it goes properly public. And when it goes public, it's finally built up. All the assets are there. So the valuation is there. Gets traded around.
Yeah.
But obviously, off-plan investing is a higher risk kind of option because when you buy off-plan, the developer could fail. In which case...
Delays, you lose interest on your capital.
I will say there were delays on this property 3 times. And so we did face that kind of, that's part of the risk profile. But the benefit is, in my view, we were investing in a company, in a property backed by Dubai Holdings, which is backed by the Dubai government. You can't really fail on that front. It's a beachfront property. It's in Jumeirah.
So do you consider this part of your the safe portion?
This is definitely the safest investment I have, in my view. A property investment is always one of the safest ones you can have. I think it was a good investment because, like I said, we're receiving offers in excess of 15% already for it. The benefits of buying an off-plan, it has those benefits. But the problem with that, I will say, is, young people, like I wouldn't have been able to do this without some support from my family. Like me, I took some of my crypto savings and with my dad and other members of my family together pooled this to make this purchase. So I'm not buying this alone. I'm buying
privately crowdfunded your property.
Yeah. I crowdfunded it with my family. The average Joe doesn't have that kind of money to buy. What's a property price in Dubai on average? It's like minimum, you need at least 350,000 dirhams, right? Minimum.
For a down payment.
Yeah. Which is a lot of money. Who has that kind of money, right? To just throw out at one investment. Your 350,000 dirhams is better off spent on a collection of investments that would produce yield immediately, or 2, appreciation at a much faster scale. Buying property is also is administratively quite a hassle. You have to pay DLD fees. You have to, sometimes in other countries, involve lawyers. There are legal contracts you have to look into. And so if you're not legally savvy, you don't know what you're buying. There's a lot of things involved in property investing that
you can't learn on Udemy or YouTube so easily.
Exactly.
So back to younger Enes. I can imagine you going up on YouTube, learning about crypto and thinking, cool, I'm going to try this out. At that point, what % of your investments and your portfolio do you commit to crypto to test it out?
I committed quite a substantial amount into
80% from the get-go?
Yeah, I was very...
You're a risky lawyer.
I was very bullish on it. Now, the reason why I did it was because I had done so much research into what I was investing in, that I had the right conviction about it. And this is what's very important about investing. You need to have conviction. You need to have a thesis, right? I don't just I'm not gambling here by saying I'm just going to ape my savings into this and see what happens. No, I bought Bitcoin, I bought Ethereum because I had done almost a year long of research into both of these before I'd made my first investment.
How long ago was this?
So I started looking into crypto in 2018. I'd first actually heard about Ethereum. I'd heard about Bitcoin, but I'd gone deeper into Ethereum because of the concept, because of it enabled smart contracts. So with my legal background, that appealed to me significantly because what I was reading was a lot of what smart contracts was enabling through crypto was effectively the replacement of real contracts in some respects. And so I looked at that and thought, wow, lawyers, are being potentially, some lawyers and some of the work we're doing could be replaced by smart contracts on the blockchain. So this really piqued my interest, and that brought me down this big, deep rabbit hole where I was doing a lot more research. So from 2018 onwards, I've been doing a lot more research into crypto, and
it wasn't mainstream back in 2018.
No, it wasn't.
Was it?
And it had crashed big time as well. So there was a lot of money coming out of it. There was a lot of people thinking it was dead.
At what price point did you enter Bitcoin?
I got into Bitcoin around $6,000.
Wow.
Yeah, that was a pretty good bet. I'd say.
And at the time of the recording, it's at 50-ish.
Yeah. But
wow.
And I got into Ethereum was better because I got into Ethereum around $80. And Ethereum is now trading about $4,300.
Okay.
So that was I continue to be bullish on Ethereum, but I put a lot of my money into that because I believed in the thesis behind both of these things. I believed firstly that Bitcoin was a credible hedge against inflation because of its limit in capacity to 21 million. There's only 21 million Bitcoin out there. I believe that in a world that is increasingly digitized, especially during COVID, this thesis became even more concrete, where we live in a world where we're all on Zoom calls and things like that. There will be limited appetite for old world kind of things like gold, silver. I don't know if, so I actually also used to buy gold and silver. I actually have that.
As investments?
Investments, yeah,
okay.
Bullions. And in fact, I bought a lot of these things because I was thinking inflation was going to hit because of all the money printing that was happening over 2020. And when I actually held some of these things in my hand, I just thought, this is ridiculous. A Gen Z is not going to buy this. Gen Z are going to put their money in crypto because that's what they understand. And it's so much more easier to move crypto than to move a block of gold. Yes, gold is limited in supply. Yes, and all this other stuff, but I have to store it in a place like a safe.
Why did you buy it to begin with then?
Because I believed at the time that, gold would be a great hedge against inflation.
So this was just last year, you said?
No, I've been buying gold before. I bought gold from an index fund before, then I started buying gold more significantly in 2020 as well. At the time, I would say my thinking was a little bit more balanced. I said, okay, we should have some crypto, we should also have some gold just in case. It's a good thing to own both. But now in 2021, I look back, I look at the gold, I look at the crypto. Gold has obviously not performed at all in any way compared to crypto. But I can see why. The investors, both institutions and the young people who are investing in hedges against inflation, they're not going to buy gold.
What did you do with your gold? Is it still there as a part of your portfolio?
I still have some gold, yeah, and it's stored.
You keep buying things you don't want, buying them anyway, and keeping them.
I'm looking to sell them now, but but having gold, I just own it through an institution. They hold it for me. I'm paying sort of kind of fees for them to hold that gold. And I've recently gone to see some of it. I just think it's just retarded to look at this.
You went to go visit your gold.
You have this here in Dubai. It's very easy to buy gold in Dubai, and they can hold it for you with like a company like Brinks. And you can visit and see the gold if you want. You can go to Dara and buy a block of gold very easily. There's silver as well. You can buy all kinds of things here. But my point I'm trying to make here is, imagine moving this gold. It's very heavy, right?
Well, why would you want to move the gold?
Look, this is exactly kind of my point. I'm buying gold. You're holding it for you somewhere.
You're paying someone to hold it.
You're paying someone to hold it for you. And you're not really getting anything out of that gold, right? You're not able to use it in yield. Like I can't loan my gold out to other people.
I can melt it and make jewelry with it.
For me,
where are my assets?
For me, this is why I love crypto. It's because crypto is programmable. It's programmable money. It's money that can be integrated with a smart contract. It's money that can be integrated with payments. It's money that can be integrated with art, like NFTs. There's so many things that can be built on top of crypto that you can't build on top of gold. I can't earn the interest I want on gold. And so, crypto does two things. It's programmable. It has aspects of it that allow it to be used in the new world, but it also can be a source of income and a hedge to inflation in a way that gold can't be. So, it is money, 3.0, so to speak. If gold was money 1.0, fiat was money 2.0, we talk about the Web 3 and crypto being part of that. Crypto is, money 3.0. Normally, I'd go on Twitter to check in and see, Twitter is essential for people who are in crypto because you get a lot of what's called alpha. Alpha in investing means something, an idea or a kind of, basically it's effectively an idea that can allow you to beat the market. So if the market rate is, let's say, the expected return is 6% or 5% or whatever, and you have alpha, you can probably make with that alpha, right, sort of 10, 20% on top of that. That's wonderful, right? So people, there's a great...
What is an example of an alpha?
There's a great newsletter called Seeking Alpha. You should check it out. It's for conventional investing, but on that platform, lots of conventional investors share their views on what is the next alpha trade. And if you trade that, you can probably get...
Meaning like what is the next alpha stock?
Correct.
Okay.
So I'm not saying this correctly because there's actually a mathematical formula for alpha, but on Twitter, people usually use the word alpha to describe an asset that is undervalued, that nobody knows about, but has the potential to really blow out and go into sort of, so let's say a great piece of alpha recently was, not recently, but 4 months ago, 5 months ago, one of the best alpha opportunities was to buy Solana. Why? Because Solana is in many ways a competitor to Ethereum. They are building a smart contracts-based cryptocurrency that allows people to build decentralized finance apps on top of it, but also NFTs. Nobody really saw the NFT thing happening. They were just thinking of DeFi in the beginning. Solana is faster than Ethereum. It moves in seconds like this. So it's far more superior than Ethereum in many ways, and it doesn't cost any gas fees, which is a big part of the problem with Ethereum. When you send any money on Ethereum, you have to pay sometimes $100 to $200, which doesn't make sense.
What's a gas fee? Like a transfer fee?
Gas fees is a fee that you have to pay to the miner so this is, again, going back to, I'd suggest you guys check out the Crypto Shakes podcast because
Crypto 101 primer.
A lot of the stuff I'm talking about here involves a lot of technical knowledge.
It's blowing past me, by the way.
Gas fees is a fundamental part of mining crypto. So when you think about crypto of the blockchain first. Let's start with the blockchain. You're turning whenever you do a transaction. Imagine you have this massive page and you're writing each transaction on it, okay? The page eventually fills up. And so you need a new page to put in more transactions. So to flip that page, what you have to do is you have to pay the miner to effectively flip that page, so to speak, okay? The miner also, you pay him...
Is it the equivalent of a bank transfer fee in real life?
In a way, you could think about it like a bank, like a transaction fee, right? So Ethereum has this problem, so does Bitcoin. In fact, any old school cryptocurrency based on proof of work has this problem with miners. Now, Solana doesn't have this problem because it's built on a different kind of protocol. It's not on proof of work. It's like crypto 2.0, so to speak, okay? So buying Solana about 4 or 5 months ago would have been a great opportunity because it then rose up significantly on the back of the NFT boom that we saw.
So it's no longer alpha.
I think it's still got alpha, but the alpha opportunity there is probably lower because in 4 months, I think it went up 1,000%. Okay?
Is there like a common alpha on like common alpha on the street?
No, alpha is very hard to get because it involves taking risk, right? One of the best alphas I've participated in was Nexo token. I bought Nexo token in 2020 when it was 10 cents. It's now $3. So that's a huge X. I don't know the X on the top of my head, but it's a lot. But I bought it because I heard the alpha on Twitter that Nexo was one of the only platforms that was doing loans effectively, that had the right collateralization, that also had insurance. They had insurance about 100 million at the time, and they had a great team behind them. They had great UI, UX. They were also going to launch a MasterCard, a lot of things that you wouldn't get sort of on YouTube.
These people with Twitter accounts who are out there spending time researching to find alphas and then just tweet about them for free. Why are they doing this? Is it to gain a following?
Yes, and let me just say, this baffles me so much. Twitter should not be free. I mean, I think it's amazing that it's free. But
I've been meaning to open a Twitter account, by the way.
But the fact that it's not free baffles me every single day, because every single day on Twitter, you get opportunities.
But they have a paywall now, right?
No, they don't.
So but I heard that some creators can put a paywall if they want to.
No. What they do have now, which is wonderful, is Bitcoin tips.
Tipping, yeah.
So I have that on my Twitter. So if you drop some alpha and someone benefits greatly from your alpha, they might tip you in Bitcoin. And I love that Jack Dorsey, the CEO of Twitter, did that.
Can you only tip in Bitcoin?
Yes. As you can see, Jack Dorsey is very bullish on Bitcoin.
Bullish on Bitcoin, yeah. NS?
Yeah.
Thank you for being on the show.
It was a pleasure to be here.
I'm going to go buy some stablecoin. Inspired. Thank you, NS.
It's a pleasure to be here. Thank you very much, Shireen.
Thank you.